We
This
understood
conference
about,
will now
let
be
me start it.
recorded.
So yesterday we are learning about purchase order process. At the time of purchase order process, at the time of product receipt, I want temporary postings, because if I want to verify at any point of time the on-hand inventory value, if I want to verify, then in that case, if there is no postings at the time of product receipt, then there will be misguidelines or misunderstood on the on-hand inventory. So for that purpose, what we are doing, a temporary postings at the time of product receipt is posting. Okay, cost of purchased material received account, that means inventory received. Here cost of purchased material invoice means it is inventory invoiced. Inventory invoiced or cost of purchased material invoiced, both are same. Here inventory received or cost of purchased material received account data to purchase accrual account credit. Okay, this we understood yesterday. Temporary postings are getting posted at the time of product receipt, and it will be reversed at the time of invoice. So cost of purchased material received account debit earlier at the time of product receipt will be reversed at the time of invoice. It will be credited, and purchase accrual account will be debited, and regular postings will be posted. Okay, any doubts in this area? Any questions? I hope it is clear. Now in the same manner, if it is a sales order process, so customer account data to revenue account credit, customer account data to revenue account credit. Let me explain it here. It is a sales order invoice. Sales order invoice, customer account data to sales revenue account credit. This is income actually. This is income. Income is so credited. Okay. Next, COG account, cost of goods. COG account data to inventory issue account credit. Because this is on-hand inventory is decreasing. On-hand inventory is decreasing. So what goes out? So this is debit the receiver, credit the giver. That rule we are applying here. So how can I remember like this one? Suppose, take the example, keyboard. I'm selling this keyboard at the rate of 1000 rupees. Then my revenue also 1000 rupees, 1000 rupees. But I have purchased this keyboard at the rate of 600 only. So my on-hand inventory will be decreased at the rate of 600. So this is also 600. This is sales value. Sales revenue means sales value. This is cost value. The difference between sales value and cost value is profit. The difference between sales value minus cost value is a profit. So automatically system will got created. The profit is equal to sales value minus cost value. This is sales value. Sales value will be shown minus, it is income. Income will be represented minus, and expenses will be represented positive. So in P&L side, in profit and loss account side, always I'm expecting more negative value. More negative value. Any confusion in this point? Non-commerce and commerce people, you need to remember any confusion. If it is any confusion, I will give you explanation once again about chart of accounts, balance sheet and P&L. So in the very first 1 week, I have discussed a lot. If everyone is clear, no problem, I will proceed. If anyone has confusion, please let me know. I will give you explanation once again. My question is, yeah.
So
Yes,
can you
please.
give explanation once again?
Fine. So chart of accounts classified into balance sheet plus profit and loss account. This is equal to 0 trial balance. Trial balance is equal to always trial balance is equal to balance sheet plus profit and loss account. Total should be always 0. So if you want to get 0, here balance sheet will be classified into two parts, assets and liabilities. Assets and liabilities. So assets will be positive. Asset will be positive always. Liabilities will be negative. So in commerce, we will call it as debit. In mathematics, it is positive. Liabilities will be represented credit as per commerce, but as per mathematics, it is minus. But here, income will be shown. Actually, income means it is positive, but to get net value 0, income will be represented in minus. It is credit, which is confusing to many minds. So many people will get confused. This is minus. Why it is minus? This positive plus minus this way, this and this sum should become 0. That is the reason it is minus. So this is revenue account. This is one series. Asset means 1, liability means 2, and equities is there 3. Okay, and then profit or income is 4. So this is 4, and then loss is 5. Loss means here expenses or cost of goods. Okay, so here this is whenever you are posting customer invoice, customer account data to revenue account credit. So income is showing minus. So this is positive and this is negative. Revenue is representing revenue or income is representing in negative. So to make the net value 0. And here inventory issue is going out. It is decreasing our on-hand inventory minus, and COG means this 5 series expenses. It is debit. It is debit. So here the behavior is quite opposite. Everyone will think like income is positive, but income is negative. Income is negative. So in the P&L side, I am expecting always negative value should be more. Here negative value should be more. Then only my company is in a safe position or good position. So here negative. So revenue amount is showing minus, expenses or cost of goods value positive. The net effect is minus 400. This minus 400 is a profit to my organization. Understood everyone? Still anyone has any concerns? Okay, for commerce people, you can use debit and credit. For science people, you can remember plus and minus. Okay, so in the balance sheet side, positive, P&L side, negative. That's it. If you apply, it will become easy for you. So now customer account data to revenue account credit, and then COG account data to inventory issue account credit. So that's what we have written. So in the system, this inventory is written as cost of units invoiced. Instead of inventory, it was not the inventory. The name of the field was cost of units invoiced. Okay. Now, at the time of packing slip, temporary postings, cost of goods dispatched or delivered. Cost of goods delivered account data to cost of units delivered account credit. This is a temporary postings at the time of packing slip, and it will be reversed these two at the time of invoicing. Simple. Because as I told you, like a temporary postings at the time of packing slip is updated, that will be good. Because suppose on 31st January, 31st Jan, suppose the material was dispatched but not invoiced. On 1st of Feb, if the financial reports are verified, then if you post temporary accounts, then it will be easy for you to track on-hand inventory properly with the system versus the physical inventory value. Yesterday we have discussed. Okay, let me show you this one first. And then I will show you this one also in the system. Okay, so I know like majority people in the market, there are so many people who are becoming finance consultants without having any knowledge on this area. So I don't want my students like, so my student should be, if he becomes employee, he should be strong in debits and credits. Even though you are a science background or commerce background, any background, it's not an issue if you understand clearly. Okay, first let me show you in accounts receivable module parameters. So first I will not enable this checkbox. I'm not enabling this checkbox. Post packing slip in ledger, I'm not enabling. If I'm not enabling, then this temporary postings will not be posted. Only these 4 transactions will be updated. Let me show you that one first, and then we'll proceed with the remaining. I'm creating like accounts receivable module, collapse all, orders, sales orders. So click on new button. Selecting the customer. So while doing this one practice, in your system, your first customer will be DE001. Don't select DE001. So if you look at this one in your system, the first customer will be, these all are created by me. Your first customer will be DE001. Don't select that DE001. If you select, you will get problems and you cannot understand. That is intercompany customer. What is that intercompany and all those things you will understand next month, not in this month. Okay, don't select this one. If you select, you will get errors. I cannot resolve your errors at this point because you don't know about the topic. I will discuss with you next month. So I'm selecting this customer. Remaining 1001, 1002, all these things created by me. That is the reason it will not be there in your system. Okay, selecting site and warehouse. Click OK. Sorry, that intercompany stock transfer, it is not covered in finance. It is in T&L only. In T&L topics, it will be covered, but not for you. Okay, fine. So let me select item. Okay, fine. So 80 quantity, 80 price, it is there. The price is 80. One quantity. So am I audible now, team?
Yes, sir.
Yes, sir.
Okay, fine. Sorry, there is a network issue in between. If it is network issues, I cannot control. That is not in my control. Please bear with me. Okay, so from yesterday I'm getting some errors, some issues. Okay, please don't leave. So look at my WhatsApp group. So if it is any issues related to this network, I will ping in that group so that you can wait, because whatever I'm speaking you cannot listen. Okay, fine, give me a second. I think it is yeah, fine. So I'm doing invoice now. So packing slip I have not posted. During packing slip it was got stuck, so I have stopped here. So I'm doing post packing slip. So without printout you are proceeding. So always at the time of sales process it will warn you like you need to take a printout, because we are dispatching this material to the customer. We will generate the invoice, packing slip and invoice. So it is a warning message only. I'm proceeding. But in real time scenario, you need to have a printer connection and you need to take a printout of this packing slip. Fine. During packing slip, I have not enabled the temporary postings. I have not enabled. So if you go to the vouchers, it will be blank. There is no financial postings at the time of packing slip because I have not enabled that checkbox. Now I'm doing invoice. I'm sorry. I'm doing invoice. Generate area page, invoice button. Click OK. Once again the warning message will come because you don't have any printer connection. That's what it is telling, like you are about to post the document without printing it. So select OK to continue. Yes. Now invoice got posted. Invoice got posted. If you verify the journals area page, invoice button, and click on the vouchers, it will show you customer account data to revenue account credit, $80. Look at this one. Customer balance account data to revenue account credit, and COG, cost of goods, COG, invoiced account data to cost of units, invoiced account credit. Clear? Any confusion? Customer account data to customer account data to revenue account credit, and COG, cost of goods, COG account data to inventory issue, that is cost of units, invoiced account. That's what I have told you. Clear? Any questions in this area? I hope it is clear. I hope it is clear. Let me proceed with the remaining. Now what I will do, I will enable this checkbox. I will enable this checkbox. Post packing slip in ledger. At the time of packing slip, post in the ledger. That's what it is. Post packing slip in ledger. So now I'm creating a new sales order. Once again, click on new. Selecting the customer, yes, 002. Any customer is fine. I have entered, but it is not captured. Sorry. 002. Any customer is fine. Okay. Selecting the site and warehouse. Click OK. selecting the same item 1001 10001, that is 10,001, which we have created. So click on tab. So $80. So now I'm doing post packing slip. So at this point, this button is disabled. I need to click on save. Automatically it will be generated. This will be enabled. Post packing slip. Click OK. Now temporary postings will be created. So it is asking for printout. Okay, without printout you are proceeding, no issues, that's fine. Now if you verify the packing slip, post packing slip, there is a temporary postings. Go to post packing slip. Voucher. If you verify the voucher is available now. So look at this one. It is delivered, COG delivered, and cost of units delivered. COG delivered account data to cost of units delivered. That's what I have given. COG delivered account data to cost of units delivered credit. This is cost of units. This is COG. See here, COG cost of goods. COG delivered account data to cost of units delivered. And at the time of invoice, this will be reversed. Go to invoice tab, generate area page, invoice button. Click OK. Now if you verify the invoice and voucher, now total 6 lines will be displayed. So delivered will be reversed. So cost of goods delivered, earlier it is debited, now it was credited. And cost of units delivered, it is earlier it is credited, now it was debited. COG credited, now debited, cost of units delivered. Okay, remaining normal. Customer account data to customer account data to revenue account credit, and cost of goods sold invoiced, cost COG invoice account data to cost of units invoiced credit. Understood? Any doubt in this? So this postings, as I told you, to be frankly, without this knowledge also, there are many people in the market. There are many people who are learning and I mean to say working as a finance consultants without having this knowledge. But I don't want my students should be like that. I want my students should be very much perfect on financial postings. Yeah. Of course, it is a small topic, but I'm taking much time to better understand for all the students, all the participants who is learning from me. I want you should be very strong in this area without any single mistake. If I'm confusing, you should not confuse. You know, to if I'm speaking wrong, you need to correct me. Like in coming sessions, I will speak intentionally wrong. Instead of debit, I will speak credit. Instead of credit, I will speak debits. Immediately you need to react. You need to react on me like this is wrong. I'm expecting that response. So if you are not clear about this invoice posting, you cannot remember packing slip postings. It is impossible. Clear? Any questions? So in the actually, like whenever I'm providing training on like offline, I mean to say in the institutes, like long back when I'm providing before pandemic situation, I'm providing classroom sessions. At that time, I have given imposition also to many of the students. I have given imposition because junior people, particularly who has completed their BCom or MBA, they don't know the importance of this one. But at the time of discussion with the interviewer or discussion with the client, if you don't have good command on this debit and credit, then you cannot become a great functional consultant. You can become a functional consultant, but not a good or great functional consultant. That is the reason I'm insisting everyone to be perfect in this area. To be perfect in this area. Okay, fine. So if you don't have any questions, I will proceed with the next topic, like taxation. I would like to proceed with the taxation. So any questions, please, before going to proceed? Okay, no questions. So just I want to introduce about the like taxation today, and we'll discuss continue on Monday. Okay, taxation. So anyone is having a good command on this taxation, Indian taxation? Anyone? So I want to understand what is the difference between GST versus the previous taxation. Anyone has any idea in India?
Yeah, previous taxation, you meant you're talking about the sales tax versus the GST, correct?
So in India, it is VAT, service tax. In India, I'm talking. Of
Yeah,
course, US taxation is different, and excise. Yes.
yeah. Okay. So the first thing is all these taxes what we listed is these as indirect taxes. That means a consumer will pay for it, but they don't know it
Yeah.
because
Okay.
it's always included in the price, right?
Okay.
And the previous version, it's called as a multi-point tax system. A multi-point tax system is basically you are collecting the tax at the end user level, but you are collecting it in a you're not using it at a uh, let's say that's a 5 levels of buying and selling. Only the end user, whoever is paying, is the only guy who is paying the tax. And then VAT is the other way. It will be collected at every point, but at the same time, whatever they paid for will be given a credit for it. For
Okay.
example, I'll give you a small example for that. Let's say you bought 10 computers today, and then you sold the 10. The old system is that okay, I bought 10, I sold 10 to the another retailer, so I don't actually pay any tax. That's the old
Okay.
system. And the person that bought from you, he is eventually selling it to the end consumer. He will pay the tax.
Okay.
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 And the current system, what it says is, okay, you are avoiding the tax this way. So let's do this. So if you buy the 10 computers and then you might have paid the tax on it. and then when you sell it,
Okay.
you whatever the tax you collected from your vendor earlier, they're not collecting it even. Now what they're saying is, okay, go ahead and collect the tax, and then when you are remitting it to the government, you have to pay whatever you collected, and then you also have to file whatever you paid as a part of your purchase, that is the input credit. So we will give you the refund, or we will adjust against what is the payable to you.
Okay.
So this way the tax, that's why it's called a, tax is collected at each value addition. You bought it for 100, sold it for 150. Then the guy who bought it from 150 sold it for 200. At 100, 150, 200, at all three levels, tax will be collected.
Okay, fine.
So that's kind of a making sure that everybody pays, and then if you don't report the sales tax, then you don't get. So now you are obligated to report sales because you paid the tax, and then you want to get that money back from the government.
Yes. Yeah, perfect. So thanks for your explanation, Nasima. So I would like to give you more explanation in detail. Okay. So whatever he said, it is correct. Perfect. So there are in India, this is before 2002. All these are indirect taxes. What is this direct tax? I will discuss with you later. So this is from 2016 onwards, and this is between 2002 to 2016, and earlier before 2002, before year 2002, this is the taxation, state taxes. So why I am comparing this one, you will understand this one slowly. Okay, you will understand slowly this one. Okay, so here before means long back, year 2002, and before, the taxes is based on state. What it means, state means Andhra Pradesh is one state, Karnataka one state, Tamil Nadu one state, and Kerala one state. So each state has their own taxation. What do you mean? So suppose take the example, I am purchasing mobile in Hyderabad. It is in Hyderabad, the tax is different. In Telangana, suppose Tamil Nadu, Chennai, if I am purchasing the same mobile, the tax is different. And if I am purchasing the Bangalore, it is tax is different. Each state wise different taxes are there. Okay, before 2002, each state has different taxes for same item, different taxes. That means suppose I'm purchasing car in Hyderabad, suppose 10 lakhs plus 10% tax, suppose, means it is 11 lakhs. The same car, if I'm purchasing in Chennai, suppose they are making 8%, then it will be 10.8 lakhs. So why this difference is there? What is the reason? Suppose take the example coffee. It is growing in Kashmir a lot. So there coffee tax is very less in Kashmir, whereas in Hyderabad it is different. It is not growing in Hyderabad, then tax will be more. So this taxation is based on the place. Based on the place, the taxes is there. And in this case, suppose company A, like manufacturing, like one company, suppose wholesale distributor company. Take the example, Rama Enterprises. Rama Enterprises. This is selling to my company, Satya company, suppose, and I'm selling to customer, suppose Ramesh. Now, here, take the example, coffee. 1 kilo coffee, it is 1000 rupees. One coffee, it is 1000 rupees. He will collect taxes, suppose 12%. Then it will become 1120. 12%, it is 120, so 1120. Now this company is selling to me. This is purchase price for me 1120. Satya company 1120. I'm selling this one to customer Ramesh. Now I'm selling at the rate of suppose 1500 or 1200 plus same 12%, assume like same 12%, then it is 144. It is 1344 is the amount. Now this is 10 like 12% means it is suppose 120. During this position before 2002, I need to pay tax equal to 144. I need to pay. This is before 2002. Later government has changed this one. This is state-wise taxes. At that time, Andhra Pradesh has APGST, Andhra Pradesh General Sales Tax. Tamil Nadu has TNGST, Tamil Nadu General Sales Tax. At that time, it is General Sales Tax. Okay, at the state-wise taxes. At that time, like after 2002. After 2002 means VAT came into the picture. VAT came into the picture because of a new government. Some, I think, most probably Vajpayee. Also, Vajpayee government. At the time, Prime Minister is Vajpayee. So he has changed this technology, this taxation to like this. The same Vajpayee government told like don't pay 144, pay 144 minus 120. It is equal to 24 only you need to pay. VAT. You can take input claim of this 120. So you have already collected from the customer Ramesh 144 rupees as a tax, but you have paid 120 rupees to the from the Rama Enterprises. So pay this one only 24. This is VAT. You can claim input tax. So this is for VAT and service tax and excise. So VAT means sales of the material. Service tax means service of the material. Service of the material means suppose like restaurants, food industries. Food industries, they are not giving to you material, but they are providing services. For that, so food, they are giving food. For that, service tax will be come into the picture. So that is service tax. And this is for manufacturing of the items. This is manufacturing of the items. At the time of manufacturing, excise tax is there. So VAT is there, service tax is there, excise tax. Like this, there are so many different taxations. Around 18 to 19 taxes are there. Suppose registration. If you are doing registration, your asset registration, then registration tax is different. Like this, around 18 to 19 taxes are there. Around 18-19 taxes are there before 2016, and later it was merged into one tax as GST. That we'll discuss. Okay, now before and after understood. before you need to pay 144 rupees, because whatever you have collected from customer, you need to pay to the government of authority 144 completely to the sales, like state government, to the state government. Later Microsoft like government, Indian government has changed this one after 2002. This is after 2002. VAT came into the picture. VAT came into the picture. This is before. So here you need to pay the entire 144 rupees, but whereas here you are going to pay 24 rupees. But still service tax is different, and excise is different, and registration tax is different. Like around 18 to 19 different taxes are there. All those taxes you need to pay independently. Now in 2016, one more government, whenever it is changed, like Modi government, they have changed into only one tax, goods and service tax. This is goods and service tax. All was combined into only one tax, whereas here AP GST, Andhra Pradesh General Sales Tax, this is long back. Tamil Nadu General Sales Tax. Okay, so in these situations, based on the place, tax will be changed. Based on the place, tax will be changed. Whereas in this one, based on the item, the tax will be changed. So in this, wherever you want, you can purchase. In Hyderabad, Bangalore, Karnataka, Tamil Nadu, Kerala, or Mumbai, or Pune, or Lucknow, anywhere, the same tax is applicable. That is GST. So this latest GST is based on item, the taxes will be different. If it is in this, the oldest taxation, it is based on the place. Okay, 1 minute. Give me a second. So in India, suppose this is item, one is item, here it is customer or vendor. So the taxation is based on the item. In India, the taxation is based on the item, whereas in USA, United States of America, here item and customer or vendor, the tax is based on the item located. Means the oldest taxation in India, whatever it is there before 2002, it was continued in USA, in United States of America. So whatever you are doing purchase, at the time of purchase, whatever the tax is there, this tax cannot be claimed. Input tax is not possible. You need to pay 144 rupees only in USA. So based on the place means, customer or vendor where he is located, based on that tax will be calculated based on that, based on the place. Whereas in India, based on the item based tax. In India, it is item based tax. In USA, it is
region based.
Location based. What is that actual word?
Region.
Region. Okay, fine. Region, but I will use the word location because where the customer is located, based on that tax will be calculated. So that means in India, whatever the taxation process available in before 2002, still USA is following the same procedure. Okay, you cannot have input claim. You cannot claim the input tax. You need to pay whatever you have collected from the customer. You need to pay. Suppose this Ramesh is selling to some other Suresh, then once again, suppose this is he is selling at the rate of 1500 plus tax is suppose $180, it is 1800, then this 1680, sorry. Okay, then this Suresh, he need to pay 180 rupees to the government, 180 rupees or dollars, whatever it may be, he need to pay to the government, and Ramesh also need to pay 144. But whereas the new taxation 180 minus 144, it is 36, whatever it is there, only that 36 can be paid by Suresh. Got it? The old taxation and new taxation. So in USA, based on the location, this tax is there, and there is no input credit at the time of purchase. Whatever it is there, that input credit will not be possible. You cannot adjust at the time of sales tax paying. But in India, because if it is a chain like this, you cannot break it. So because you need to show definitely from where you need to purchase, where you have purchased, in GST or VAT, even GST or VAT, goods and service tax or VAT also. This in these cases you need to show this 120 from where you have purchased. If you are not showing, you need to pay $144 or 144 rupees. Understood the high level picture about Indian tax? Not only Indian taxation, everywhere there is two taxations always, either based on the place taxes or based on the item. In the entire world, based on the item or based on the location, the taxes will be there. Okay, so next we'll continue on Monday in depth about this one. So
Nah,